Vice President, Amarillo National Bank.
I don't mean to correct him, but I'm only an assistant vice president. I don't have that much power. And I thank Professor Anwar for putting me in between the two smart speakers. Y'all can go ahead, take a Coke break or whatever y'all want. Listen to these guys. Don't listen to what I have to say. But I think the reason they have me here is they want me to give kind of an outlook on how we see the global financial crisis affecting Amarillo. So I'm going to talk today about Amarillo's economy and then also banking in our area. And just like we started seeing last year in our index of leading indicators that we put out, it started going negative. And usually that's about 4 months ahead of what we see. So what that means is 4 months from then we thought the economy would start going bad. And sure enough, in January this year, our economic pulse started showing negative numbers. And also, like we said last fall, we don't believe this downturn in Amarillo's economy is going to be as severe as the rest of the country. Now, but the main thing is, and this is the question on everybody's thing, we have to wait and see how long it lasts. Amarillo's economy is pretty complex, and what we try to do with our polls is we put it out every month, and we try to put out information on different segments of the economy that people understand and can relate to. When people think about the economy, the first things they think about are employment, housing, and overall price levels, which is pretty much inflation. And the most important number we look at is jobs. Employment numbers are important because they're directly correlated with the quality of life for individuals and also a functioning economy that increases overall output. And like I said, beginning at the start of this year, Amarillo started to see a decline in the number of people employed. In our March economic pulse, we were down 1,200 jobs from last March, with the losses coming in transportation, utilities, manufacturing, and business service sectors. We think the job losses can be blamed on the nationwide recession and the collapse of commodity prices, especially energy prices. Construction and housing in Amarillo is also down. Big projects at the start of the year from Bell Helicopter and Amarillo College kind of artificially boosted the numbers, so now we're starting to see more real numbers. And building permits in March were down 54% from last year, and residential starts were down 44%. Also in the housing sector, we've seen prices decline about 3%, while overall the actual number of homes sold is down 7%. And while those numbers are down, it's nowhere near as bad as they're seeing in California, Phoenix, and Michigan. Retail sales are down, and that's pretty alarming for us because that's the first time we've seen that in quite some time. We think this is due to both the loss of jobs, but also people acting in their best interest and spending less money. This is where uncertainty and consumer confidence really impacts our numbers. The thing on a lot of people's minds is inflation. We put out a CPI report that's pretty much just focused on Amarillo, and the inflation numbers are down, but in the future we're looking to see a run-up. Our CPI is showing grocery prices are up, but we also think people are buying more generic and private label foods instead of consumer staples. And like Bob was saying, all this government spending is bound to stoke some inflation, and we think that's evident in the term structure of the yield curve right now. It's getting pretty steep. Commodity prices have a big impact on our area, and we did see a big run-up in commodities as speculators and hedge funds piggybacked on each other's trades and drove up prices. But during the great leverage unwinding last fall, we saw how much these players contributed to the rise up in prices. If it were wholly a demand-driven issue, the decline would have been much less steep and severe. And this is going to directly impact farmers in our area as well as the drought that we all notice. So the farmers are going to struggle this year due to the lack of spring moisture that is put us behind other ag-producing parts of the country. Other industries important to our area are dairies and feed yards, and both those are struggling. The dairies, most recent milk checks coming into dairies are at $10 or below for every 100 pounds of milk a dairy produces. And going out in December, it doesn't look like that number will get above $15, and this makes it hard on dairies until December because their break-even prices are between $15.5 and $16. Dairies that aren't hedged to both lock in the selling price of their milk as well as to lock in the purchasing price of their inputs are losing between $2 and $5 per cow per day. Feed yards are having the worst time in over 30 years, and some people are saying this is the worst feed yards have ever seen. There's excess feeding capacity along with the worst losses on cattle that, like I said, we have ever seen. It began with a huge spike in grain prices that, as mentioned, was run up by the speculators, and not so much as the ethanol demand is. This was followed by a dramatic drop in cattle prices that shadowed the drop of all commodity prices. So here you had these feed yards with these high-priced cattle in the feed yards, and those prices dropped, and a lot of this cattle was unhedged. And then they went out a long ways thinking grain prices were going to continue to run up, so they had forward contracts locking in their prices at these high prices. So the cattle prices fell and the grain prices fell, and they're stuck. We think that supply side is okay for the cattle, but the demand worldwide is down. And now that since that wasn't such a rosy picture, we're going to change subjects and talk about area banks. And it seems like these days the only banks who are getting good press are the blood banks, the food banks, and the sperm banks. But we don't want to say anything bad about our profession, so we're only going to talk about local banks. And another thing that's important is in the 1980s, Texas had a huge banking crisis that contributed to a very severe recession in Texas. And what it was is all these other banks around the country were sitting around laughing at banks in Texas. Well, now Texas banks are strong, and these other banks around the country are in some serious problems, and so the question is, who's laughing now? Our area banks are okay due to conservative lending and knowing their customers and not extending out of the area. Banks around here are going to be impacted by the recession, but I don't think we're going to see any failures. One instance in proving how local banks are strong, and you hate talking or saying good things about the competition, is last month Herring Bank went up to Colorado Springs and bought a good bank in Colorado on the cheap. And what this shows is that the bankers around here make worthwhile decisions. They don't go out and raise expensive capital. They don't take government bailouts. They patiently sit there, figure out what's best for their bank, and they go and act on it. And now it's time to toot Amarillo National's own horn. Amarillo National is a family-owned bank that is as far away from Wall Street as you can possibly get. We employ over 600 people in 10 branches and 3 drive-up Amarillo facilities in downtown and a full-service branch in Borger. We value our customers and employees much more than our shareholders, and this gives us a tremendous flexibility and competitive advantage. Not only do we help Amarillo by paying taxes, but we're also involved in downtown development, middle school education, youth sports, and some people in our family who work at the bank seem to put more emphasis on landscaping than banking, which at the end of the day is probably better for Amarillo. We've been serving customers for over 117 years and have 3 generations of owners working at the bank. The bank gives over $1 million a year to local charities. And the main topic is bank strength and how their balance sheet look. And as compared to last year, our deposits are up 6%, our loans are up 7%, and our capital is up 12%. Our installment loan past dues are down 30%, and our mortgage past dues are flat. One of the things I like coming to WT and talking to these students, because I remember taking some finance classes and I loved them, so I try to take what I learned in my finance classes and apply it to the bank. And I think our story is a good case study in decision-making in finance and also capital structure. We're 100% owned by our family and do not have short-term outlook like publicly held banks. Their entire focus is on next quarter earnings just because there's so much emphasis on what the Wall Street analysts say. Our entire focus is making sure the bank will be around for our grandchildren. This allows us to make better decisions and takes out the problems that some of your teachers would call asymmetric information. And the 2 types of asymmetric information I'm talking about are adverse selection and a moral hazard. And the adverse selection happens before an event, in this case an EPS earnings announcement. And what happens, what we think happens is to hit or exceed their expected EPS, these banks they'll go to their accountants and try to do some accounting tricks to inflate some earnings. And then what happens is their peer banks will also see that they're doing this, so they'll try to do that. So that increases their earnings, and Wall Street loves that, but that artificially inflates their stock price. And then at the end of the day, somebody will blow the whistle, say that those earnings aren't quite so strong, and then the stock prices of the banks will fall to or below book values to revert to the mean. The moral hazard part of the problem is what happens after the EPS announcement. And what that is these guys on Wall Street, they'll see their banks hit their earnings and they'll do everything they can to make sure they hit their earnings. So what they'll do is they'll put on too much leverage on their balance sheet, take risks that they're not used to taking, start selling CDOs or get into some commercial real estate lending. The moral hazard leads to risk-taking that is not truly in the interest of the shareholders and leads to disaster. While the business of lending always has asymmetric information, our decisions are based on strong credit backgrounds and long memories. Worrying about pleasing your shareholders is much more consequential because it forces management to have a much narrower outlook. Now also on finance, you talk a lot about the capital structure. And I think the capital structure lesson we see in banking is that retained earnings are by far and away the best way to finance operations. because instead of raising expensive bonds and equity, this is the cheap way to do it. It keeps your cost of capital low. And at the bank, we like to say that your bondholders are like parents who don't let you do anything, and equity holders are like teenage kids just wanting money out for no good reason at all. Since strong and growing bank capital is more and more important to customers, we can plow all our earnings directly into capital instead of those other banks who have to pay their bondholders and give dividends to the equity holders. There are contractual obligations to the bondholders, and stockholders know that bank stock is not worth having unless dividends are paid out. Lenders restrict growth possibilities and might strangle management, and sooner or later, equity holders are going to demand bigger dividends or eventually an all-out sale. So not having to worry about the demands mean you can concentrate wholly on the operations of your bank, your employees, and your customers. And that's what we're seeing in Amarillo with the banks here, why they're stronger, why things are going to be okay. The recession's going to stay in Amarillo, not as long as we think. It has hit Amarillo is what I'm saying, but the strength of the banks and the quality of the people around here is what's going to carry us out of here. So in closing, the Amarillo economy has slowed down, and we don't know how long it'll last, but we do know that it won't be as painful as other parts of the country. Area banks are strong and don't have to answer to the government, which is very important. And the last time I was here, I think I closed out with kind of a quote that came off as pretty cocky. You know, it sounded cocky, so I said, we're better than Wall Street. And I want to correct that and say, we take better care of our customers and business than those on Wall Street. Thanks.